Hi, this is Alessio. Hope you're well. In this video, I want to talk to you about why do markets, in fact, all markets, eventually crash. Join me. All right, guys, welcome back. Before I start, let me just tell you where I am. This statue you see behind me is called the Angel of the North. It is the tallest statue in the whole of the UK. It's actually one of the most famous icons in north of Britain. So a lot of tourists actually come here. In case you're interested, this is actually not far away from Newcastle, town of Newcastle in England. All right, guys, let's talk about the markets. Why is it that all markets, whether it's Bitcoin, stock markets, forex, gold, eventually crash? There's a very simple reason for this that actually the top trader Linda Raschke mentions in her book, Trading Sardines. In her book, trader Linda Raschke says the reason why actually all markets eventually at some point crash is simply because there are no more buyers left. So as an example, I want to take you back a few hundred years ago to the Tulip Bubble, the famous Tulip Bubble of the 1600s. You see, guys, in the 17th century, there was a massive bubble you might have heard about called the Tulip Bubble. During the 1600s, the price of a tulip became so expensive that it became almost the price of a house. In fact, it almost became so expensive that it was equal to a worker's salary, a whole year's salary. As you can see from this chart, this was a massive bubble that eventually, of course, burst. Just like all bubbles eventually burst, the tulip bubble eventually burst as well, and it came down crashing. Now here's the thing, guys. Why did the tulip bubble burst? Because it actually holds the clue to why almost all bubbles eventually burst, why all markets crash. You see, guys, at first there were buyers pushing this market up higher, pushing the price of tulips higher. But eventually it got to a point where there were no more buyers left. There were only sellers. If you think about it, guys, you need buyers, fresh buyers to come into the market to push the price back up. But of course, it got to a point where there were no more buyers left. There were only sellers. There were only people who were looking to sell to make a profit, and that's why the tulip bubble eventually burst. And that really is the same reason why all markets eventually burst, including Bitcoin. For example, if you look back in 2017, at the end of 2017, by the time Bitcoin had got to $20,000, at that point, the reason why it crashed is because there was no more buyers left. Okay, all the buyers had pushed the price up to 20,000 or near 20,000, and eventually the market became saturated and you only had sellers left. In other words, people who wanted to sell to make a profit or short sellers. And by the way, this also means that anyone who could have bought has already bought. That's why there's no more buyers left. There's no more juice left. There's no more juice to push the market up. By the way, you had the exact same thing happen with Bitcoin just recently, this year in 2021. You had buyers and speculation pushing the price up over to 40,000, 50,000, 60,000, and eventually near $64,000. There were no more buyers left. The market became saturated, and usually at that point, when there are no more buyers left, there are only sellers. In other words, you only have people who want to sell to make a profit or short sellers. At that point, the slightest trouble, the slightest selling pressure can push the price down and eventually cause a correction or a crash. The same thing happened to the stock market back last year in 2020. In January and February 2020, the stock markets, the S&P and the Dow rallied strongly higher, and actually we saw at that point there were very few buyers left. There were only sellers at that point, and eventually the market dropped and crashed. So guys, that's the reason why almost all markets crash. The fact is, when all bubbles become extremely overheated, over bullish, overcrowded, at some point there are just no more buyers left. There are only sellers. People who sell who want to make a profit, or people actually who are afraid they're going to lose money. And of course there are short sellers. That's the reason why almost all markets eventually crash. And here's something important. As soon as selling begins, any kind of selling, for example through profit taking, what usually happens next is that investors and traders who find themselves in a losing situation, for example, because of margin calls, they start selling because they don't want to lose any more money. And when those guys sell, that causes even more panic, and panic adds to more panic, especially when short sellers also join in as well, pushing the markets even lower. All right, guys, before I finish the video, I thought you might want to actually have a look closer at the Angel of the North. So let me just take you to it. As you can see, it's right there. So this particular statue is not that far away from Newcastle. So let's go close to it. Here we go. As you can see, a lot of people just underneath this thing. Let's go a bit closer. All right, so we're walking now. Guys, I can see I'm walking up to the statue. There it is. It's pretty tall. There it is. All right, guys, finally made it. And as you can see, it's right there above my head. All right, guys, hope this video has helped. Cheers, guys. Bye now.